Hello and welcome to Red's Business and Technology Podcast. I'm your host, Jackson Barnes.
I'm your co-host, Brad Ferris.
Today we're sitting down with the Billion Dollar M&A Engineer, Cissy Ma, which we'll elaborate on that, don't worry. Done over $17 billion worth of transactions, Deputy Chair of CPA Queensland, and many, many other roles. Cissy, thanks for coming in.
Thank you very much. Great to be here.
No worries. Let's you want to unpack, maybe, I was going to give the whole introduction, but you had so many titles, it was going to be 3 minutes long. Do you just want to elaborate on what you're doing currently? Might be the best start for the audience.
Sure. What am I doing currently is I have a business called Grow and Sell Your Biz. I actually help companies grow by getting them the right investors and partners and help them increase their value when they sell. So grow and sell your biz.
Yep.
And the reason I started that business was actually working in the M&A industry for billion-dollar companies for 20 odd years. And then I decided that I've got all this experience, all the contacts, all the relationships, and I noticed that the smaller side of the business, like the $1 million businesses, they're not getting the right advice because all the bigger like the big four and the companies, the corporate advisory companies, they're looking at $20 million, $10 million plus businesses.
Yep.
So the smaller businesses are pretty much scraping by. They're not getting the right advice, the right support in expanding their business, and they're not thinking about how they can grow in organic way, because the fastest way to get if you're $1 million, the fast way to get to a $2 million in revenue is to acquire another business that is $1 million in revenue, right? But people don't think about it that way, because they are good at and entrepreneurs, when they build a business, typically they're good at building the business from ground up, and they're really good at getting people on, getting customers, getting contracts, etc. But they're not thinking, okay, what's the next step? Sometimes they think about, okay, what is my exit point? And that exit point could be 5-7 years down the road. But if you have the right support along the way, you could actually get there much earlier, much quicker. I was actually talking with one of my clients earlier today, and they are exactly there, because he's been in business for many decades, like a couple of decades now, and he's basically building the business, but at the same time thinking, okay, what can I do now? I'm already at a point where I can acquire a number of others and then roll up. But at the same time, there are other options. So we had a chat, and I gave him some options as to where to go from there.
Yeah, awesome.
Not necessarily just roll-ups. You could potentially be rolled into a big company and then get, exit that way, or you can go through something like a reverse takeover and backdoor listing and things like that. So that's all potential options.
So you basically leveraging your knowledge and experience and network of decades of billion-dollar businesses to multi-million-dollar businesses.
That's right.
Awesome.
To help smaller businesses.
I'm keen to unpack that, and I know you've also in your time interviewed and met some pretty amazing people like Oprah and Steve Wozniak, which we'll go back to later. But where did you start? So did you in university, did you do accounting, commerce or something? And then
I did
move right back to there.
Commerce honors in UQ, and then I did Master of Financial Management out of UQ as well, so 95, and then came out, this is dating me now, but came out of it and then went straight working for Queensland Treasury Corporation, which is basically started to be the corporate treasurer and advisor for Queensland government-owned corporations like Queensland Rail, Stanwell, you name it. A really interesting bunch that, get the chance to actually to work in a lot of really diverse transactions, quite a few $1 billion of power station assets, some train assets, a few $1 billion of train assets here and there. I mean, these transactions I didn't count towards the $17 billion of M&A because they are structured finance transactions, but there are quite a few $1 billion there as well.
How long were you at QTC for?
7 years, I think.
Okay.
Yeah,
right.
a good stretch. Yeah. So started working in corporate finance and still ended up actually going to one of my clients.
Yeah, right.
That's what happens,
Yeah,
one
yeah,
of
yeah.
those instances. So they poached me, and
Yep.
they had a Christmas 3 months saying that they wanted us to backfill to support, and I did 3 months, and they said, "Oh, can you be here permanently?"
Yeah, right. And you said for the right dollars, I can.
Yes, they did give me a big raise, and then I started basically. They gave me a new team as well. Asked me to set up a new team in the corporate finance team in Queensland Rail. So that's basically. In QTC, I was managing people as well, but they were all virtual teams.
Right.
So I managed the transition for the GST implementation project with
Right.
QTC. And back when I was I only graduated 3 years, and I got put into that job, and I was managing multi-billion, tens of billions of dollars in transitioning from one system, pre-GST to post-GST for input tax business. And
So if you had 3 years of practical experience, why did you get chosen to do that out of curiosity? What were you doing so well?
Yeah, I think it's because they can see that when I put my mind to it, I was a really good project manager.
Okay.
So that was, I project managed a cross-border lease database, which is basically managing, I think, about $18 billion of cross-border lease transactions for Queensland government. And back then there was no, push out of things as yet. The calendar system wasn't that good, so we ended up. Funny enough, a finance person ended up actually putting together the first software to manage the long-term transaction. They were like 20-year transactions. Yeah. So
wow.
we ended up getting Qantas to utilize that for the for the planes, some of
as
the
well.
planes. Yeah. So that
technology always comes back. Technology,
That's
Brad. We've had
right.
so many guests on this show. Like we had John Buchanan, who was one of the leading Australian cricket coaches, probably one of the most famous on here. How he leveraged technology early in his career to get all the data on bowling and
That's right.
and so on.
Yeah,
and use that then to go through the ranks for Queensland Bulls up into the Australian cricket team and then overseas. Same thing, technology background. Here we are, technology company. You mentioned as well, Cissy, that you're currently Deputy Chair of CPA Queensland. When did you do that? And then, and you want to elaborate on what you're doing with CPA Queensland?
Yeah, I have been a CPA since 1997.
Yep.
And basically, only in the last, I guess, less than 10 years that I actually started to be actively involved with the CPA community, that I started helping acting as in the business committee.
Yep.
So we have, when I was the chair for that committee, we had 78 discussion group meetings in a year or something like that, but they were all managed by volunteers. So that role is actually a volunteer role.
Right.
So the deputy president is also a volunteer role, but that role is actually being you have to be selected by all the members in Queensland. So we go through every 3 years we go through an election process.
Yeah, right.
So I got elected to be on the council, and then you get you get the within the council of 12, then you get elected to be whether you want to stand as the deputy president, the president, or whatever. So it's basically a conduit between members and then the CPA itself, because it's a member-run organization. It has changed quite dramatically since 2017. It has some events happened in 2017. Then the entire organization turned very member-driven. And since then, we've actually increased in terms of net promoter score, which is quite amazing. We've got, when we have the member survey, we get, 9,000 out of the 172,000 members would, go through the questions and answer. And we started, I think, back in 2017, we were around the 5-ish, and now we were 7-ish.
Yeah, wow.
Yeah, close to, edging on to 8, 7 something, which is quite quite good
Yeah, very
for membership organizations. But, obviously we're always looking for opportunities to improve. And we have a number of Center of Excellences as well. So I'm on the ESG Center of Excellence. We're looking at globally how we can actually contribute to the ESG debate and the standard setting, all of those things. And also, basically, it's a ESG Center of Excellence consists of 10 members from all over the world. So Europe is pretty good in a lot of the ESG things. So we get a lot of the benefit from there as well. Yeah.
So on the being a chartered accountant and obviously been for a long time now, how does that help your
CPA?
Okay.
That's okay. You said chartered accountant.
Okay.
But it's all right.
CPA.
We work with CA all the time.
I forgot I'm in a room with two accountants here. That background.
Not a right.
How does it help your M&A work?
Yeah, I think for me it's quite essential to have that background in doing M&A. Or in any business, we call it the accounting is the language of business. Yeah. I'm one of the ambassadors, member ambassadors for CPA into school. So I actually this year I've already visited a couple of high schools to go through because there are less and less funding in universities or high schools for business and accounting type subjects.
Really?
So we are actually seeing a sort of a pipeline reduction.
Really?
And so we are going back to the schools and just basically explaining to them what would an actual accountant do, in real life. So in my case, it's really, okay, even though I'm a fellow of CPA, and I always said I actually haven't done accounting as a professional role for all my professional life. It's always been corporate finance, strategy, business development, M&A. So, but with that, without the accounting background, without the understanding, I would not be able to do my job really well in the M&A field. I need to understand the three-way financials, the historicals, the forecasts, and all of those things, and whether it's reasonable, what's a normalized EBITDA, what is the actual forecast, and all of those things. And it's really interesting that when I spoke to the high school students, some of them, the two places I went to, one is a public school, the other one is a private school. And regardless of whether it's public or private, it appears that only 1/3 of the kids actually know what accounting is or
I always say, can you help me with my tax?
Yeah. Yeah.
Why do you think that is? So did you say before that the amount of people going into studying accounting at universities on decline? That's
right.
Why is that?
There is increased funding for STEM in high school. So if the kids actually, they can decide which way to go. If they go STEM, they have additional funding for the school. And if they went business and accounting, the student will have to pay additional fees because the government has reduced funding for it. So that's the source of it from high school. But going into university, if you didn't learn any of the accounting in high school, going into university, that might be difficult. So there's that. And there's also I guess the young kids nowadays, they wanted something like that is cool. Accounting's concept is not cool, but what we're trying to say is that actually look at what I'm doing every day. I'm dealing with high pressure M&A work, and in this morning I've dealt with 4 or 5 different people from the US, from Australia, from Singapore. It is it's a global job, and accounting can take you anywhere. That's what we're trying to say. Yeah.
Cool. Now you mentioned as well that you interviewed, I think it's on your LinkedIn, Steve Wozniak. Do you want to elaborate on how you got the opportunity to do that and what was that experience like?
Yeah, sure. This is actually back in 2018.
Yeah.
I just started my business back in 2018, and I went to an event, Tony Robbins event. I wanted to
leave
see
you two in a room, honestly.
I wanted to see Tony Robbins, but I didn't actually end up buying Tony Robbins.
Which event?
Yeah, it was May 2018.
Was it a UPW?
No, it was before UPW. It's one of those National Academy things, like a 3-day event in the convention center.
Okay.
Yeah, so that's the one that I went to. There's about 4,000 or 5,000 people there. Yeah, so I ended up actually buying the number one business and business coach, JT Fox. So he's the one who actually provided that opportunity. What he does is he actually provides a lot of those high-level opportunities to his clients.
Right.
So, provide the platform for you to actually go and go in front of people from 2,500 people from 70 plus countries. You go there in Los Angeles and you get on stage, you go and ask questions of Steve Wozniak. That is really good branding, isn't it?
Oh, yeah.
Yeah.
So you went to a Tony Robbins event and you met a business coach.
That's right.
I've heard these stories before.
Yeah.
And then that landed you on stage in LA with...
That's right, with Steve Wozniak. Yeah.
Very cool. How was the interview?
Yeah, that was really good. It's in front of that many people. It feels like I was just chatting to him in the lounge room or something. It didn't feel like it's I wasn't
founders of Apple,
nervous.
yeah.
Hey,
one of the founders of Apple.
I know. He's very down to earth, and you ask him a question, he will just go ahead and elaborate. It makes it really easy.
Yeah,
being the interviewer.
Yeah,
I like your role.
The other one. You said it was pretty cool, and not many people in Australia, in Brisbane, would get this opportunities. You ran to Oprah as well.
Yeah,
How did that come about?
That was a really surprise for me as well, and it was many, many different ways, and it can be traced back to JT Fox as well, because one of JT's clients is called the Black Mentor, Joseph Nantoma. He's in the US, and he saw me present in one of the forums that JT had. It's called the chairman. So it's a group of high-level business people getting together, and we pretty much all have significant businesses. So talk about, I at that event, I pitched a roll-up of education businesses, and he thought, oh, that was a great idea. He wanted to do that as well. So he asked me to go to the US, and so he sort of funded me to go to the US and help him build a program. So from end to end on all of the steps that he needs to go through to acquire businesses in the US and in this area. Yep. And he's got a target of acquiring 100 businesses in the next 5 years. And, I did that program for him in June, early June, and by September he's already bought 3 businesses.
Yeah, right.
Yeah, so he's very someone who implements straight away. But then he said, "Oh, this is great. Can you come and actually present that to my this Wealth Flow event in September, October?" So I said, "Okay." Yeah, sure, why not? Good opportunity as well. So I went, and then Oprah's significant other, so Stedman Graham, he's been JT's coach for almost 10 years now. Right. He's one of JT's coaches. JT has a lot of coaches. He pays a few $1 million of coaching fees, so far.
You're a coach with a lot of coaches.
I know. I mean, if you want to be really good at something, you need to find the right coaches, right?
Yeah.
But anyway, Stedman Graham was on stage, and then Oprah came in as a surprise, and she was invited upstage after Stedman spoke, and we got the opportunity to listen to her just off the cuff for almost 20 odd minutes. We got the opportunity to take photos with her, but only the speakers get that chance.
Wow.
Yeah. So
that's awesome.
Was very lucky.
Sounds like you've had a very cool last couple of decades. So I want to unpack a bit more into the for the audience listening, get some of your knowledge in the M&A space. Mm-hmm. The M&A scene in Brisbane, what's it like now compared to a couple of years ago? Obviously, you've been doing it on your own for, you said now, several years.
That's right, since 2018. Yeah. So I think it's heating up. So the last couple of years, a lot of people have been kind of reviewing things, but not making decisions.
Okay.
Last year, I did help one of my biggest clients, who's a listed company out of the US, acquiring an Australian company, and was announced on the New York Stock Exchange in September. So the transaction went through. It's they announced something like $45 million US. So that's a transaction that took almost 12 months. But, the actual work is probably half a year. But end to end, from the point we started looking to the point we actually transacted, took almost 12 months. Yeah. But, that's the rare transaction. I think if you look at the number of transactions, it has definitely come down last couple of years. But, the year before 2022 is pretty good. 23 hasn't been that great. Then 24, we're all saying, we're all coming back to the market, you know? Yeah. And
obviously, there was the tech crash and stuff that happened. And
exactly. It's all not just tech crap in the public market, in the VC market as well. So 21 was like everyone was happy to invest on, a promise. Without any.
Cheap.
Was that also because of interest rates?
Interest rate would have something to do with it. Yeah, definitely.
Money was cheap.
But I think it's because people were looking for things to invest in during the pandemic, and it basically they were all rushing and don't want to. It's like the fear of missing out. They don't want to miss out, and then the market went so high that it's not really sustainable and it's not really backed up by fundamentals. So if you look at the fundamentals of some of the businesses that people, they are paying 30, 40 times revenue, which for business that are not even earning a profit. So,
Crazy.
It's crazy.
What are you seeing in the M&A space in the industry we're in, like technology, cybersecurity in particular? Because I think you mentioned you do some work in that space. Like, is that an industry that's got a lot of overseas interest at the moment?
Yeah, definitely. Overseas interest and Australian private equity or also Australian interest as well.
Yep.
So, U.S. interest is one that I would point out. A lot of U.S. private equity and even listed companies, they, because of the arbitrage, pretty much the Australian company is still seen as cheaper for them. If they were a listed company and they're actual, their PE at let's say 15 times revenue, and the Australian one is typically much lower in the multiple. So immediately when they acquire a business, they'll get an arbitrage. It doesn't matter how small the business is, it's still it all adds up.
So you're saying that because if they evaluate in the US at 12 times multiplier and they buy a company in Australia at 8 times, that adds to their revenue, and that's automatically
straight away
they're
there's
worth more.
arbitrage. So there's revenue, the valuation arbitrage, and then there is also if you buy a number of companies, a number of smaller companies, because each one would have been valued lower than whatever 8 times, if it's even lower, might be even lower than that, then you're building up a revenue kind of portfolio that is it could be something that quite sizable, but then the valuation multiples are not that high. And then when it gets to, we call them the private equity pyramid, the higher the EBITDA there is, the higher the multiple as well, because there are less and less companies that has higher EBITDA. And so, your typical demand supply, right?
Yep.
Yeah.
In your experience, you said the market's heating up, but what are US investors, kind of companies are they looking for in particular? Is there a certain size, turnover, or industry, or
it varies.
What are they looking for?
It varies. Previously, listed companies like to acquire businesses that has $3 to $5 million of EBITDA as a minimum. So earnings before interest. Sorry, I forgot to.
Accounting speak. Break it down.
Earnings before interest, tax, depreciation, amortization. So it's kind of the cash flow equivalent. It takes out all these non-cash items, and they like to acquire something like $3 to $5 million of EBITDA as a minimum. But now they're coming down in like looking at even smaller EBITDA companies. They're happy to look at it as well.
Yeah.
So I've been approached multiple times by listed companies in the US and even and family offices, and there are more interests coming out of China as well. Which is really interesting because there's a fairly strong capital control from China to overseas. But there's still a lot of the requirements because they want, a lot of the people in China, they wanted to migrate to, developed countries.
Right.
And a lot of people actually do have a quite a, significant amount of money. And they want to, kind of diversify their wealth basically globally, and Australia is seen as one of those countries that they are happy to look at and they're focusing on at this moment.
Interesting.
Yeah.
So apart from profit, what else are investors looking at in particular? Is there any kind of industry or like size or
it all depends.
Like
I mean, if the listed company is in a B2B enterprise SaaS or that type of business, they want to acquire others that are similar in that similar line.
Yeah.
But if the listed company is in a different industry, then some of the listed companies are more like a listed investment holding company, so they will be quite okay with all sorts of different companies, and they're quite open to whether it's cybersecurity, whether it's like education, whether it's so if it's the technology companies, they tend to look at technology companies, and then for others like in some private equity, they're only interested in boring stuff like like transport, manufacturing. Yeah, you think that people don't want to do that kind of thing anymore, but on the contrary, there are quite a lot of interest in that because they believe that there is, it's a need versus want. So some manufacturing is still required, right? We still need stuff to, we need our garden more.
You mean more like services?
Services, a lot of services as well. So services industry, accountancy, bookkeeping, and a lot of things you wouldn't have thought that makes that much sense, but it is because people need it for their business or for their life, and it's a need versus want. Yeah.
And let's say someone listening, and we have female like business owners. I guess our audience is a combination like business owners or business leaders or people in the IT space or cybersecurity space. So let's say we've got some people listening, and they're considering in the future to get their business ready, either to acquire other businesses or list or sell or whatever. What do you think is important for them to do?
I mean, actually, you don't even need to think about in a number of years I'm going to exit. I think it's actually important to keep a pulse on your business at any given time. Know the value of your business at any given time. It's all what they call them, always be ready. You never know, because like I come across people who just say, actually last time I went to Dallas, just before I got onto the plane, one of my clients actually said, I just got approached. Someone gave me an offer. What should I do now? I said, okay, now I wrote a list of things that she should do before I got onto the plane. So basically there's, you kind of have to get your house in order, what needs to be done, so that when the investor or the buyer comes in, they can look at all the, your historical financials or the process and procedures in the company that still works, and what is your contract, whether you have all good long-term contracts, recurring contracts, that kind of thing. So ultimately, the buyer is buying a future recurring revenue or future maintainable revenue, right? So if you were doing $1 million last year and you say, I'm going to do $5 million this year, they will do a pretty big, they will say, hey, why is it that you can do that? And then you say, well, next year I'm going to be doing $10 million. Okay, well, you want the buyer to pay at a higher EBITDA or whatever, but you got to be able to demonstrate to them that what happened in the past is a good indication of what's going to happen in the future. And, if what happened in the past is not a great indication, then you have to be able to demonstrate how you bridge the gap. Is basically you might have a big contract that you've just signed that you haven't being able to deliver it as yet, or is on the way being delivered. That would be something that would be good for you in terms of valuation uplift.
Yep,
based on history. Yeah.
Good
So
advice.
getting your house in order, get the a good advisor to help you with that, and also don't always think about it in a way that you want more people to look at you, not just the first person to look at you and say, hey, I want to buy you at this, and you said, okay, I'll go for it. But if you were to sell your house, would you sell your house to the first person that comes knocking, right?
Yeah.
Business is the same thing. If you want to sell your business or think about selling your business, then you should actually think about the process as running some sort of auction process. Obviously, you've got to be really careful about confidentiality, which is why having an advisor would be better, because you can keep the company from the market is a very small place. It's very easy that people talk.
Yeah, you don't want to chuck a for sale sign out the front and put it on realestate.com, because that for a business is a bit interesting. What in your experience, more on the acquisition side, at what stage in a business should they consider acquiring another business? And what are you seeing that's work really well in terms of the say a business in general, talking, not what you've done, but acquiring another business? I
have seen business acquiring other businesses when they're very, very early, as well as when they're 20, 30 years into their business life. The earlier ones are typically the ones that are a startup, and they're into, let's say they're earning about $1 million of revenue, and they saw, there's another startup that could potentially, complement each other, and they get together, then the whole scope increases. So it's 1 + 1 = 3 rather than, 1 + 1 = 2.
Yep.
So both of them, they would say, hey, I can contribute half, I can contribute the other half. They can do a script for script rollover. And then you can actually acquire another business without any cash. So that's possible. So and even you can acquire a bigger business without any cash as well. So sometimes people think, I have to have a lot of money to actually acquire. I have to be profitable to acquire another business. That's not the case, because you can actually, if you have a really good platform. I'm not talking about technology platform. I'm talking about business platform. So, for example, one of my client is education, and they do education, international student recruitment. So they have a really good platform in that they've already been in that industry for 30 years, and they've basically got 85,000 plus people coming through to Australia, but they want to expand globally. So they basically got in, work with another company out of China, who, we got this two-way work, and then another company out of UK, which, got the students going from China to UK or UK to Australia. So there's the synergies. The three companies adding together would be better, 1 + 1 + 1 = 6. Right. Rather than 3. But they don't, whilst one of the companies is quite significant, they don't need to be, a $10, $20 million business. They can be a small business, and all of them work together. And then once they started working together, they started to combine the front end and the back end. And the marketing and all of those things they will get the operational benefits out of it, and they can prove it for a little while, and then private equity will start to get interested in that.
Right.
Yeah.
So when you say the 1 + 1 + 1 = 6 thing, that's to elaborate on that. You're saying because they leverage other capabilities from those other companies, therefore, and they also get to a certain turnover or profitability percentage
that's
where
right.
they're more attractive to someone to buy. Is that what you say?
Yeah, one is that, but also even within the 3 companies that we're talking about, those companies are actually, they each need their marketing arm, for example. Now they can pool the resources, so they can just do one set of marketing.
Like a shared service kind of
Yeah,
model.
yeah. So it's an economy of scale thing, not just
Synergies.
mine. Yeah, exactly. Synergies.
I don't know, can you still use that word? I don't know.
They do. I mean, that's the whole basis of M&A is that you have to have synergies. Otherwise, there's not much point.
Yeah. A couple more questions. Brad, anything else you wanted to ask?
So I was just going to ask around in the Brisbane market. So one, I guess, around attracting and finding clients for your business. So your process for that, and then do you have? Is it, since the market is heating up, is there more competition with other kind of M&A consultants?
There's always competition.
Yeah.
I mean, it doesn't matter even if the market is dead, there will still be competition. For me, I think it's more because there is a reputation out there, and so far I've always had deals inbound.
Yep.
And I haven't done any advertising or marketing. Even though you can see me on the social media, I get invited to speak. I get paid to speak in various forums, in the US, in Singapore, online. I've actually got a full day thing this Saturday, which I will speak for like 45 minutes about how to buy a profitable business with minimal money, capital. Yeah. So by doing that, and I'm doing,
thought leadership and networking.
Thought leadership network. Yeah. So that's kind of the lead generation thing.
I didn't want to ask for that.
Word of mouth as well, I suppose.
Yeah.
It's pretty much word of mouth. I know my coach would say, no, you shouldn't just do that. My coach is just very, very strong into marketing and branding. But I think, it works in some areas. And I think in the M&A area, people would only work with people that they trust. So which is why I'm very careful about the clients I take on. I always do a lot of due diligence before I take on a client. And sometimes it can be frustrating for the potential client in that I want to give you money. Why aren't you getting it?
I think you're probably right doing that approach, like speaking at events and then word of mouth referrals, that kind of thing, because it's probably unlikely someone would just Google someone to sell their business in Brisbane or whatever, and it appears. I did want to pick your brain actually on networking, because we first met at the Westpac event we held a couple of weeks ago in the city, and I was like, oh geez, Cissy's really good at networking. And obviously you are, because you've networked your way to meeting Oprah and those kind of things. What advice would you have on people around networking?
I think the important thing is what's your objective when you go to network. I don't believe in going to a network event and giving out business cards, because I think you got to be able to see someone and talk to them and understand where they're coming from, right? So it's really understanding the other person's perspective. And then you're able to actually talk about work. And if you just keep on talking about yourself, then you might be able to get something across, but it's not going to be a good basis for building a relationship. I always think that it's good to hear what the other side says. The age-old thing about 2 ears and 1 mouth, right?
Yeah.
Being a good listener it's really an art. Yeah. But it sort of comes with practice as well. So you got to put yourself out there. You got to go to those networking events, but be selective at the ones to go as well. So I won't go to all, a lot of the networking events where I might go once and then I feel like this is not something that not somewhere I belong. It's more understanding that people go there with I need to get some job out of this. It's more okay. How can I help each other?
Yeah.
We have the colorless thing. I think I'm not sure if I mentioned I've been a colorless activator since 2018 in Australia. We are basically a fund to increase funding for female entrepreneurs.
Okay, cool.
And we've already funded 24 ventures in Australia. We funded over 170 ventures across 5 countries and 95% success rate, which is quite amazing, But we have monthly catch-ups for colorless people. And when we go there, we basically say, hey, what's been happening this month? Tell us, what you need. How can we help you? And then there's one offer and one ask. So something that you can offer others and something that you need help on.
Yeah, right.
And we just help each other that way. Yeah. It's not something that happens all the time, all the networking events. I feel like that is a really different environment.
Yeah.
Yeah.
That's pretty cool. I got one more question, then I'll go back to you, Brad. What was your favorite transaction that you've done in your I think you said about 27 years in the industry now?
Yeah, 28 years. Yeah.
28?
Yeah,
What's your favorite one?
Favorite one, there's quite a few interesting ones. Like the listing IPO of Horizon, for example. I was, basically the head of the vendor due diligence team.
Okay.
And we've got 100 people working on that deal for, a long time, almost a year. And that was a $5 billion transaction. But that is fairly transactional, I have to say. That a lot of people working on it. But the one that's my favorite is actually a transaction that we didn't end up doing.
Right.
But I spent a lot of time on it. So back then, I think we were called QR at the time. This is the railway, and we worked with the China Railway Corporation and worked together on a deal that we were going to acquire a business together. And so from the very beginning, I was basically there I acted in a way that is way more than the financial had in that transaction. I was doing all the the due diligence, the pitching, the explaining in Chinese, which it was very interesting at some stages where I was talking to my Chinese colleagues or the China Railway colleagues in English. I'm talking to my Australian colleagues in Chinese.
Yeah, right.
Because I was there, doing the translation. I completely forgot. And it was like, okay, well, sorry, that's wrong. But it was very interesting in that it's a transaction that transcends both the financial and the cultural for, the two companies and two countries. And, we had a common goal, trying to acquire an Australian railway company.
Yeah, right.
But there are differences in understanding from the Chinese perspective and from the Australian perspective. And, what the seller was looking for was an amount that we could not support. So in the end, we did a lot of work, but decided that it's not in our common interest to go forward with the transaction.
Yeah, okay.
However, we cemented our working relationship from then, and then we continued looking at other opportunities from there. So you always, the thing is, a transaction is a transaction. You don't just stop there.
Yep.
Most of my clients have been my clients since day one. Not all of them. The one that I have since day one, they're still my clients today. The one I did the transaction for last year, I actually, they were one of my first clients back in 2018, this listed company. And the first deal that they asked me to help them look at was like a $10 million acquisition, very small deal. And I looked at it and I told them I did a good presentation and basically said it's not worth it. You shouldn't invest in it. And the head office was very happy and they said, oh yeah, because I'm really acting in their interest.
Right.
I could have earned more money if I said, yes,
Just do
go
it anyway.
ahead. Yeah. But I don't believe in that. I believe in, actually acting in the best interest of the client. And since then, I've looked at 7 transactions for them.
Oh, wow.
Yeah. So it's all, every year pretty much we look at a transaction and a few. And once you build up the trust, they will say, hey, going forward, every deal we want Cissy involved.
Brad, do you want to ask?
No, I think I was pretty good. We've covered quite a lot of ground there. So.
Yeah, I think we did. We're just on 45 minutes. I did have one more thing, but that's all right. I guess, and on what's next for you in your career? You more of the same? You do anything more exciting or?
Yeah, I'm very excited because I'm actually doing a course, right? I'm putting up a course, not I'm doing a course. I did that in the one in Singapore, and now I'm doing that for this Saturday as well to take people through how they acquire a business. So to help them look at, the different methods, the different options, and also, if they were looking at a plumber acquisition, for example, I can tell them, okay, this is what you need to do. Obviously, that's very small, for most transactions. But if you have 10 plumbers, that it's repeatable revenue as well. It could actually be quite good deal.
And what are you planning on doing with the course that you're writing? Just going and speaking more about it at other places?
Yes, I'm going to speak about this on Saturday, and hopefully we'll get some people actually subscribing or buying the course.
Okay, cool.
And then we'll start doing it as a 52-week course, and I call it Business Buyers Launchpad. And it's basically every week we get on a webinar group together for 1 hour, and I will talk about an element of buying businesses for half an hour, and the other half will look at a particular deal. We look at deals that I'm doing, or a deal that was brought forward by one of the people. We've already got a few people interested, and people have paid money for it as well.
Yeah.
So my daughter was saying you're selling it too cheap, but I said, well, I'm not trying to earn a living out of doing this course. This purpose is more to say, hey, how can I help people? And also, if I help people, they are more likely to bring me deals as well.
Network
when
effects.
they need, when they need some business, when they, it could start with a small transaction, but it could also end up being big transactions.
Yeah.
You never know.
Awesome.
Yeah.
Cissy, thanks for coming on. I feel like you've shared a lot of wisdom around the M&A space,
you.
and it seems like you had an awesome last couple of decades. So really appreciate you coming in.
Thank you very much. Really appreciate it.